And good morning, everyone. My name is, welcome back to Neely FX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, sometimes building EAs for the MetaTrader 4, MetaTrader 5 platform, as well as getting into prop trading. So this is what I do. First, let's go ahead and get into some trade review from my trade this week that did not go well. And then we'll talk about some possible setups. If you hear a chirping sound, I'm also joined by Henry, the Forex trading parakeet, on my shoulder right now. So he's maxing out my audio input. So if you hear a chirp sound, it's not your machine or anything. It's this bird that's on me. So let's go to the risk disclaimer screen and do this real quick. First, I'm in the United States, so this is required by law to my knowledge. Okay, this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold a CFTC nor NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade the funds you can comfortably afford to lose. Now, the CFTC Risk Disclosure goes something like this. Forex trading carries a high degree of risk and may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of all or some of your investment capital. Okay, so let's see what's going on today. So here we have the my demo account. Make sure it's my demo account. Yep, it's my demo account. I got $46,000 in it right now, when I used to have $47,000. Let me turn this light on too so we can see a little better. There we go. So that's a hint of what how my trade went. First, let's take a look at that way down here. Go to the history, and it seems that I lost $1,200 in my demo account, which is not good. I did not lose that much in my live accounts. I did mimic the live trade. This is actually, I made the stupidest trade possible in my demo account. I did not lose it near that percentage in my live accounts, which is good because that's real money. And this is, I'm not going to call it play money because there's the psychological effect that takes place when you're trading demo versus live. Trading demo, you can just seem to knock it down like it's no problem, get in a trade, get out of a trade, make money left and right. And then you get into live trading and you freeze because there's a psychological aspect that takes place when you don't, when you're using real money and versus demo. But at any rate, let's see what happened with this. We'll take this down. Henry's quite talkative this morning. Here we have our charts. Just kidding, we don't have any charts. First thing I noticed this morning is that these bond yields have kind of reversed a little bit. Now, Japan has kind of come down. I've also got a little bit of information here on Forex.com, ForexFactory.com rather, that the, let's see, where did it go? It's on my other screen. Don't see it on this one. Japan unlikely to face U.S. pressure as to strengthen yen. Oh, here we go. Japan's wholesale inflation slows, relieves interest rate hike pressure. So that's one of the things that took place yesterday, was that their wholesale inflation came down, which means that they're not as likely to raise interest rates as they once thought. Right, Henry? Let's see. Here. Very interesting. There you are. Let's see. So after that, let's go ahead and get back into here and see what we've got going on. Back to the euro versus the dollar. This is the one that I thought we might have a little fun on yesterday, but Henry's being Henry today. Okay, so this is yes, this is my chart here. Paper trading. I don't have anything going on in paper trading, so we're going to close that out. Or do I? Trading. Yeah, no trades right now. So we're going to close that out real quick and take a look at what we've got going on here. Again, it's just going really respecting the 4-hour trend line and the for support and resistance trend lines. I don't see any trades coming up. You might see some bounce off of this level right here, but I don't see anything driving it, and momentum is not where it needs to be to place a trade. That's one thing that I did that was a mistake on my last trade, was that I did not have enough momentum in the trade to for it to carry on. for it to carry through. That is a pin that's trying to form. Again, we're not going to do anything until after the candle forms, but that is not that's not conducive for trading too either. It is in this huge area of support right now that has not shown any effort to break out of it, and it's got a change of character right there, a bullish change of character. However, that's not enough to get it into a trade today. The dollar versus the USD JPY. Let's look at that. I can get it from my friends at Forex.com, and here we go. We have again. Now the trade that I got into about right here. As you can see, I bought the top, which is not good. Bought the top, and then it came crashing down yesterday when I was showing the divergence between the U.S. and the Japanese bond yields that indicated that their currency was going to strengthen and the dollar was going to weaken in comparison, and therefore we have a drop in the pair price. So when that drop in the pair price happened, my stop loss was set about right here. No, it wasn't. It was set about right here in the 40s. I think 40 is where I stopped it. So right here, that's when it pretty much hung it up and decided it wasn't going to go. It also came down a lot more. Now it did recover, but it is bouncing off this area of what's now looking like resistance right now at around 146.36, and it's probably not going where it needs to go to place a trade today. Let's see. Let's look at gold real quick. I have a very big interest in gold because XAUUSD, because with bond yields coming down and less inflationary pressures on the world market, we could see gold slip, and that is exactly what's kind of happening here. However, it's again respecting both the 4-hour resistance and the support. I should label that one. And the support trend line, which is probably not conducive for a trade at all. It's not even getting into this area of support, and it's not even breaking into this area of resistance either. So looks like it's got a ton of resistance right here between 33.29 and 3,400. So in that $70 price range, we've got a ton of resistance going on. And also got a break of structure right here, a bearish break of structure, which is showing that gold could be coming down soon, which I would expect as the economy turns. I would expect that to happen. And here we go with silver. And silver is being silver. It's pretty much all over the place. Again, no trade in the 4-hour time frame. If you're trading the minute or the 5-minute, you might be able to get out a few dollars out of this. I'm going to change this character right here. Unfortunately, I am not in the position to sit in front of the computer all day, and nor do I want to sit in front of a computer all day and trade all day, because that will drive you insane and start increasing your ability to make stupid decisions. So that's what we've got going on right now today. Not a whole lot to talk about. I do want to kind of talk about something I do want to find out. So I have bond yields for the Japanese and the there we go. For the Japanese and the European, Japanese and American bonds, but I don't know where. I'm not tracking the European bond yields. That's not giving me the information I need. I think, oh, there we go. Look at this. We've got the bond yield right here. So you go to super charts. And yes, we can. And these are the symbols for it. We have the EU10Y. Should add those to my list. EU02Y. 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 10Y and the EU 30Y. I have those added right here. I'll move them up later so we can see the correlation between the bond yields and the euro and the dollar. So maybe we can trade that more effectively too. This is also the summer, and summer is also known as the summer doldrums because it gets really boring in the summer because most of the major players are sitting on a beach in the Caribbean somewhere and are on their yachts and are not playing in the markets because they don't have to. I also noticed that the Inner Circle Trader, if you follow ICT on YouTube and other places, he is on vacation till September. So he's not coming back into the markets until September because he's going to go have fun with his family. Absolutely, that's what we trade for, is to come up with more free time and less working time, which I'm not there. I'm definitely not there yet because I'm working a lot, but I do enjoy my job. So that's and it also pays really well. So with this, let's go back to euro dollar. And again, tempting to get into a buy right there, but not going to because it's too close to the resistance, and we don't really have any. To call a bottom is not really a fun method of doing things. Now, if you get down here, you may want to call one because that has a history of bouncing off of that. So around the 170, well, 117 level. See if it supports the 117. So that would be an interesting trade right there. Again, not going to take it yet. Might look better next week. I don't know. We'll see what happens. But that's what's going on today. If you like this channel, if you like the information I'm putting out there, then be sure to like and subscribe. If you there's not really a whole lot more for me to talk about with relation to these things, and I got to start getting out the door. So you guys have fun. Have a great one. Happy trading, and I will talk to you later. Take it easy.